The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the January 21st, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. Hope everybody out there had a great holiday weekend. Maybe you didn't have an extra day off, but it sure was nice with a little extra day here to relax. And so great to be back with you. Let's go take a look at one of our empowering beliefs. Well, this is a multiple of empowering beliefs. One of my favorites because it is so true. It is so true, folks, if you listen to these words. You want to teach this to others. Remember, sometimes some of the things that we share with here at TFNN, they're not just for you. They are for you to pass on to others. And this one is called Become Your Own Electrician, the electrician of your beliefs. You know, beliefs, they absolutely have the power to create and, of course, the power to destroy. You and I, we've got the awesome ability, and I do mean the awesome ability, to take any experience of our lives and create a meaning that, well, one that disempowers us. That's not what you and I do. But one that can literally save our lives and empower us and take us to places we never even dreamed of. Think about it like this. There's only one thing you can control in life, and I mean only one thing, and that is the meaning that you give to something. It's really the beauty of the markets we trade each and every day. We've got bulls out there. I guarantee you we've got bulls. And we've got bears. One that sees an event as a selling opportunity, and one a buying opportunity. You see, your beliefs, the meaning that you give to events, to statements, criticism, things like that, you're really the one in control of that meaning. Pretty cool when you think about it, isn't it? Because what we can or cannot do, what we consider possible or impossible, it's rarely a function of our true capability. It is more likely a function of our beliefs about who we are. And that matters because all personal breakthroughs, and that's something that each of us are always looking for. Doesn't matter what level you're at, you always want more out there. And they all begin with a change in beliefs. So how do we change? And nothing's going to prove that more than the Olympics when they started off here, a couple of weeks from now, I guess, right? The early part of February. We're going to see all kinds of records get broken out there. So the question is, how is it that you change your beliefs? You know, the easiest way, the most effective way to change is to link your brain to associate massive pain to an old, disempowering belief. You've got to believe at the deepest level that your old belief has cost you in your past, will continue to cost you in your present, and ultimately will only cost you in your future if you continue down that same path. That is what is called the Charles Dickens process. You know, knowing what we don't want is just as important as knowing what we do want. And the reason is because once we rid ourselves of a disempowering belief, there's this little void out there, and it's got to be replaced with that tremendous pleasure of adopting that new empowering belief system. Lastly, you and I, we've got to know that at any moment, the decision that we can make can and will change the course of our life forever. Could be the very next person you stand behind in line or sit next to on an airplane, the next phone call you make, the next phone call you take, the very next movie we see, the book we read, the page we turn. Any one of these things could be something else, but any one of these things could be the single thing that causes the floodgates to open. And then all the things you've been waiting for, they will fall into place out there. So, hope everything is falling into place for you. If not, just stay tuned because it certainly will. Right now, we've got the Dow. It's trading off 6 points. It's trading down at 16,452. S&P trading at, it's up 6 points. It's trading at 1845. NASDAQ Composite, this is where the strength, well, you got the strength in the marketplace, both in the Composite and the Russell 2000. Russell 2000 actually stronger than the NASDAQ. Russell 2000 is up 7.5 points. It's up 0.6%. The NASDAQ Composite up a little over 0.5%. It's up 23 points. Apple's up $5. We'll take a look at that. Microsoft up 27 cents. Google up $7.34. Signature Bank, SBNY. That's up 12% here. It's up $13 and a change out here. I believe they were out with earnings revenue of $64 million versus $50 million. So a nice job on the bottom line out here. I don't know if I've got the revenue side. I don't see it handy, so I can't give it to you. But they are trading up nice. You got Intercept Pharmaceuticals. That trades all around the place. It's up $12 right now, up 4%. Trading up at 305. Priceline trading out at 11.87, up $9 and change, about 0.7%. Google up 0.6%, up $7. Intuitive Surgical up $6. Mastercard up 6. Tesla Motor up about 5.77. Biogen up 5. Amazon up 4.70. To the downside, being led by CNOOC Limited. CEO is a ticker symbol. It's trading down $9 and change. Little downgrade alert. That's all that I see out here. Off 5%. Netflix is off 2%, down $7. Expedia off 7%. It's trading down $5. FireE, F-E-Y-E, off 6%. It's trading down 4%. You've got 3D Systems off $3. YY off 3. About 260 out here. Our call number is 877 927-6648. Give us a call, folks. We'd love to hear from you. Let's take a look at the S&P 500. Let's look at the indexes. Right now, the S&P intra-session high so far today, 1849.31 as it tried to take on the 1849.44 level. That's the 1231 high. Of course, that's no longer the swing point high inside the S&P 500. It made a higher high on January 15th as it got out to 1850.84. So long as it trades inside of that swing point, the low of which is 1840.52, well, it can go and test the high of that level. Don't know how the day will end out here, but right now it is trapped that swing point out there. No real indication as to what. Take a look at the Dow. The Dow has been a little bit of a weak link out here. It's trading down $10 right now. That's not a big deal. Of course, futures were up pretty big. We took a look at the futures and the 9 o'clock show. We saw that they were really just trading into resistance area, the January 2nd downdraft. Speaking of resistance levels, that January 2nd candle out here, nice big bear sash candle. It says resistance now truly is the December 31st high at 16,588.25. The low of that candle, and that is the swing point, 16,446.68. You're at 16,446.81 right now. If we do see it close below that, well, then the work to the upside be done inside of the Dow. So we want to be paying attention to what goes on inside of the Dow. And, of course, we want to go ahead and we want to watch what's going on inside of the strong hands of the market as well. Are they going to give it up? Because you've got the battle between the bulls and the bears going on. And if the strong hands don't give it up, well, then the markets will continue to move higher. Where could they move higher to? I am glad you asked me that question. I know that's one of the reasons you checked in with us here at TFNN. If we take a look at the Russell 2000, Russell 2000 looks like, to me, it's on its way to forming this next 3 drive to a top pattern. That would take it up to about 1183.97. You gapped up here this morning. We'll see if it can hold the gap up here. A nice 1.6 expansion of swing points. You know, what the Russell 2000 did, it had a 3 drive to a top pattern. That's the bluish area that you're looking at on my screen. And when you break through what is considered to be, I'd have to say, probably the second most bearish. Can you say second most bearish? If you can't, I just did. So I'll have to throw a yellow flag or something. And if we do take a look at the Russell 2000, broke through the second most bearish pattern out there, that 3 drive to a top. That is pretty impressive. It had a shooting star candle as well, the December 26th high. It had a bearish engulfing candle the very next session out there. So it's up. That's really the support level now. Support level, you've got a couple support levels. I would have to say, first, the top of that shooting star, 1167.96, another area of support. Even if it could break that, it's going to be the gap up that occurred on January 15th, and that would be the high of the session from the 14th at 1163.43 out here. But the Russell 2000 right now looks like it wants to complete that little move higher to about 1184. Right now trading at 1174. Intra-session high 1177. So it's got about another $6-7 potentially left inside of it. That is on the Russell 2000. We take a look at the NDX 100. The NDX 100 here, it also has a similar pattern that it is trying to complete. That pattern would be now this would be, I think this might be the first 3 drive. Is this the first 3 drive, or was there a second one? Well, the Let's talk about what it is that we're looking at here. This 3-drive pattern would complete right around the 3650 type level out here. Right now, the level of support inside of the NDX 100 certainly going to be in between the gap areas. It's either going to be the high January 14th, 3581.60. Or the low, and I can't really say it's the low of that gap because we saw it close just slightly below the January 15th low of 35.92. So really, the support on this here has to be the open gap from January 14th out at 35.81.60. We'll see if this pattern here is going to complete. Right now, just a sideways trading range day inside of the NDX 100. Let's take a look at the. Let's see, we got the Russell. We got the NDX. We did get the Dow. We got the S&P 500. So we're good to go. Let's go take a look at the SOX index. Let's change this over here to a daily chart. Let's go see what we've got going on the side of the SOX. Nothing really huge out here. Straight at 539.84. This has been a strong move inside of the SOX semiconductor index out here. So today, just an inside day. No real pieces of information to provide to us. Let's go take a look here at the New York Stock Exchange. We haven't looked at the New York Stock Exchange, so let's go take a look at that out here. It testing again its most recent high, which was the December 31st level. Hold on, come on, baby. There you go. Recharge here. December 31st. It has now. I don't think it's tested. Let's see if it's tested the high. 10.406.77. What did it get to today? Did not. 10.401.77. That's not that I'm disappointed or anything. It just simply has not tested the high. Just another inside day inside of the New York Stock Exchange. Really been consolidating here ever since about the December 23rd time frame. So the consolidation level right around the 10,230-ish level to about 10,406 or so, right around there. So New York Stock Exchange not giving us a ton of information. Of course, let's take a look at net advancing issues. Well, it's not too shabby out here. So you got the New York Stock Exchange up 14 points. It's got 1,292 net advancing issues. You got advancers outpacing decliners by 2.5 to 1. You got 2,100 net advancing issues, 8,100 declining issues. I don't know if that's 2.5 to 1, but that is about as close as I can get for you as we speak here right now. But that is a pretty good market breadth inside of the New York Stock Exchange. So it is just the Dow that is giving us some problems out here inside of the market, or giving the bulls problems out here. I'm actually neutral as we speak when it comes to market indexes right now. Leading the charge inside of the Dow to the downside here, you got Goldman Sachs is off about $2.50 out here. Johnson & Johnson off $2. IBM is down $2. Travelers off $1.87. The strength inside of the Dow coming from Visa, Boeing, Chevron, and United Technology. Visa's up $2. Boeing up a couple of. Boeing is only up $1.28 out there. Let's take a look here at. Let's take a look. Well, we're going to take a look at something when we get back from the break. I do hear that music. Dow's off 31. The NASDAQ composite is up 17. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow is off 55 points here, so we've seen quite a swing here in the market. You've had the Dow trade, the futures that is, trade up as high as 16,489. You are down at 16,342. So what's the math on that? That's about a 140-point swing or so inside of the Dow. Now, the Dow here is moving into on the 30-minute chart that we are looking at here in the on my screen here if you're watching us on Tiger TV, moving back into the bottom of that little consolidating pattern and moving into the sold level out here, but it has fallen off the cliff very quickly as we came with the market open. So now, what is interesting, I deleted all of just simply. I usually have markings on my. I have many markings. That sometimes it confuses you maybe as much as it confuses me. And I can tell you, when we began the year out here, so this is kind of interesting. And you can go back and you can mark this on your chart. So this is just this is a freebie that Stevie Sun is throwing out at you. When we began the, let's take a look at it on the Dow actually. I had them all marked on the S&P, the ES mini. But when when we began the year out here, what I started to know, this was coming back into the January time frame here, what I began to notice was that all the selling really began in earnest as the market opened. Now, when I say the market open, I'm looking at the futures contract, but what I'm really identifying is the NYSE open, the 9:30 Eastern Standard Time open inside of the market. And that has been present all except for about 2 days out here in the market. Now, it's not right at 9:30. It's within the first hour of the session open is when you really start to see the selling in earnest out there. So, and I'm not about theories or what have you. Really, all I do is look for patterns. I can't tell you why, but what we have seen here this morning with the futures moving up, we've seen that selling begin in earnest again, and it's all been, with the exception of the last couple of trading sessions. I think it might have been Wednesday, Thursday, Friday, or Thursday and Friday of last week. That pattern has been present. Go mark it on your chart. You'll see what I'm talking about out there. Again, it's within the first hour of trading, which could be the 8:30-ish to 10:30-ish time frame out there inside of the markets. But certainly we can see here, let's go take a look at the real strength that was inside the market, and that was the NASDAQ. And you can see here the NASDAQ futures. This is the consolidation pattern that it is traveling in. It got up to the top of the consolidation box, closed just slightly above it, but ever so slightly out there. And that is a strong consolidation area. Now, we know this consolidation area resolved itself first to the downside. We picked up on this last Friday out here. It's always important to identify consolidation patterns as early as you can inside of the market, because consolidating patterns are the most difficult to be able to make money in. If this year proves to be a sideways choppy market, well, we want to be able to identify that as quickly as we can out there, because chop, chop, fizz, fizz, it is not a relief, folks, not until you break the consolidation pattern and you get back on any kind of a trend out here. Now, that's not to say that you can't make a bunch of money in a consolidating pattern. You've got to be willing to sell the tops and buy the bottoms and have some stops on the other side, and know that when that consolidation pattern fails and moves to the other direction, that you just simply hop on board that train. But the real strength inside the market this morning was the NASDAQ futures, and it looked like it was going to try and break that consolidation pattern. It has not out there. In fact, you've seen a really strong bearish engulfing candle, wide-ranging bar to the downside since during the 10 to 10:30 session. We still have 2 minutes left inside of his 10:30 session, so that has been the real strength in the market, and that strength here has vanished as we speak here right now. The ES Mini, the S&P futures, they got real strong resistance at 1843.25, so a break of that area to the upside, that would be very bullish, but right now that is acting as a resistance level. The Euro Japanese Yen, let's take a look at this on a little longer term basis here right now. We took a look at the 30-minute chart. We saw nothing bullish inside of that when we looked at it earlier this morning, but let's go take a look at the currency pair on a daily basis, see what we see out here. This completed your 1 to 2, A to B equals CD up. For those of you that own the art of timing the trade out there, your ultimate mastery system. And if you don't own it, you should go invest. You should have some books inside your library, and that is one of them that you should have out here. When you do a 1 to 2, A to B equals CD up, oftentimes you're going to do something different. Well, in this case here, the Euro Japanese Yen, it's made the dead cat bounce pullback just simply off of the last move up. That's the last move up coming off of the lows from November 7th. Now, it was out at 131.20, up to the highs that were put in here on December 27th. That was up at 145.67. I do not see any bullish signal yet that suggests that the move to the downside inside the Euro Japanese Yen is over. More likely, we would see a move down to about 136.73, a normal move, a natural move. That move would then put pressure on the U.S. stock market. Right now, Dow's off 48, S&P is up 3. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow is off 63 points right now. The VIX Index, that's what we've got up on my screen. If you're just listening on the radio, your mobile device at TFNN.mobi. Thank you so much for doing that. We're looking at the VIX. Remember, you can always catch the archive of this show on Channel 10. The 9 o'clock show, that's archived on Channel 9. We make that pretty easy for you. And, of course, you can get the live stream of this show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a box, 3 smartphones on it. Click on that button. You'll see this show streaming live, and you'd be looking at the VIX chart. And the VIX chart here, there's a red squiggly line going across my screen. That is a line of demarcation. If you are bullish, you do not want to see the VIX index get above that. The level, by the way, 1351. You're trading at 1310 right now. The damage that gets done inside of a market is when the VIX index gets above the 50-day exponential moving average out there, and that's where that $13.51 area represents out here. So you got the VIX moving higher out there, and that's an area that you really want to be paying attention to. Let me also do this here. Let me switch over to another chart, just kind of give you what it is that we should be looking for, be paying attention to today. Oh, I don't have it updated on here. Okay, I'll do it during the next break. I'll go out there and find out what the New York Stock Exchange net declining issues are needed today. I think it's around the 680-ish range out here. No threat as we speak here right now. In fact, New York Stock Exchange still showing pretty remarkable market breadth out here. You've got advancing issues outpacing decliners by a little bit more than 2-1 as we speak here right now. But nonetheless, there is a level that you want to be paying attention to because the bears have not been able to take control of the market. If we just simply take a look at the VIX index, if we use that as one of our indicators out here, we also I want to go ahead and take a look at the New York Stock Exchange because it's the wider breadth of the market. And if, in fact, we see the indication here would be the summation index turning down inside of the New York Stock Exchange. I guess I did not update this chart here over the long weekend. Something I just didn't get a chance to do. Oh, well, not a big deal. But the New York Stock Exchange has really been very strong out here, and the summation index has gotten up to high enough levels where the move to the upside, in my opinion, is not over. That doesn't mean that we don't see a pullback or retracement. It just means that over the long haul, I see higher prices coming inside of the markets. Now, that's what's going on in the summation index. That's what's going on inside of the VIX. Let's go take a look at some of these stocks here. Let's take a look at some stocks in the core area. Then we'll take a look at some other stocks that are popping in, dropping in the market. So inside of the core area, let's take a look at Priceline. Priceline here, having some strength inside of the NDX this morning, but all it's doing is traveling in a little consolidation zone out here. It's up towards the top of it, which is the swing point high from November 29th. That had 327,000 shares. You're up into it so far this morning with 161. So the volume is pretty good, moving up into a swing point. You can use that as a swing point, or you can use December 20th. That has 779,000 shares. Still volume not too shabby out here this morning inside of Priceline. So not seeing any kind of significant reversal or anything inside of that equity. If we take a look at Google, Google up right now. Well, it's trading off its highs out here, but no real damage inside of Google. Just none. If we hear, how about that? I didn't realize that I had that on my chart. It might have been Z or somebody inside of the Tiger's Den earlier talking about Google. Google, I'll give you another freebie out here. I don't know when the earnings release is for Google. Maybe somebody in the den knows out there. And if you do, maybe you could punch it in. I can go ahead and give it out to our listeners out here. It's probably pretty soon, though, because it looks like they release right around this time of the January 27th. Thank you, Z. That was from Z. So today's the 21st, so you've got, another 6 days before they release numbers. Now, Google it's a very interesting stock pattern. It doesn't work all the time, but, man, this pattern here, if you take a look at the probabilities out here, it's a really good one. And what I'm referring to is if you go put the earnings dates when Google released their earnings number, that first move is a real good indication of where price is going to travel to. Just as an example, here, come back to January 22nd in 2013. Google came out with numbers at the close on that session, gaps up the next day, continues to move higher. Now, you want to make sure that you're using where's it going to move to. You've got other pattern recognition tools that you need to go ahead and put out there. January 30th, is the exact date for the next release of Google's numbers out here. If you take a look at the release of numbers here on April 18th, we can see price moved higher. Again, you would take a look at A to B equals CD patterns. You'd take a look at expansions of swing points. You'd use candlesticks for reversals, things of that sort out here. You'll see that it also works here to the downside. If you take a look at October 18th, that was the session here where Google moved to the downside. It moved all the way down into a low for an entire month, down into the November 16th lows. Now, November 16th, you also had the significant lows. This is back in 2000. Oh, that's 2012. You also had significant lows inside of the stock market as well. Let's go to Ken in Iowa. Ken, thanks for calling. Thanks for holding. How are you today? Uh-oh. Ken, are you there?
Yes, hello.
Good morning. How are you?
I'm doing good, thank you.
Excellent.
I was listening to you talking about the VIX.
Yes.
I've been wondering about that. I kind of look at it when it's on my screen, but how do you trade that?
Well, if you were going to trade it, there's a couple ETFs out there that you could trade. Now they're really more day trading type vehicles. UVX Y, I believe, is the long position on the UVX. It might be S, Ken. You might have to look at it. Typically, it's usually S. That would be the short position, but look into that one first, and that would be a way to play it. There are other options out there. I don't play it too often. I actually am in that in the trade right now for the VIX index. But there's other ways that you can play that. What's really important about it, in watching is I like to use it both from the standpoint of is it above or below the 50-day exponential moving average. To me, when it's below that, it tells you there's liquidity in the markets. A lot of times people will correlate a low VIX and they'll say there's no fear out there. I suppose fear is certainly one way to look at it. To me, it's about liquidity. And, when the VIX is below that 50-day exponential moving average, there's liquidity. When liquidity dries up, that's when you start to see prices really erode inside a marketplace where you can see the most damage being done. And I've learned over the course of time, it's not going to catch a bottom or a top. You've got to use other tools out there. But what it can do, Ken, is it really helps you to either adjust stops or positions or what have you. Now, the VIX here, you can trade this from a candlestick standpoint like anything else. So it's giving you some pretty strong messages that the lows, which are 1169, for some reason is a significant low. You had a hammer candle that formed out here. As price came back into that hammer candle, it's never been broken, the low of which is on January 13th. It got down to about 1182. It formed a nice big bullish engulfing candle. So those lows out there inside of the VIX are, that's why I took the trade. Because of the candle formation that was forming out there, as well as a couple of other things that I take a look at for my subscribers. Okay,
good. Take a look at BX.
Absolutely. Tell me what you're doing and how I can help you there. And are you in the trade looking to get in? That's Blackstone Group.
Yeah, I've
folks.
been in it for some time. I bought it around $14.50, and I sold half of it around $23. So it's been going up pretty steady.
It has. It tends to track the S&P 500 pretty well. So when you're trading Blackstone, I've done some studies. I think it was Blackstone and BlackRock. I have to go back and look, but I think that it tracks the S&P 500 pretty well out there. If we take a look at it, so you sold a little bit at 30. You should have some support out here. That January 6th level, about 32.68. That was a little key reversal session out here. Bearish engulfing candle. Price got above that level out there, so you should see some support on a pullback at about 32.68. Now that it's above that level, which is today, I'm assuming let's assume that it's going to stay above that area here today. It's trading at 33.18. That should be your area of support. There's also a key reversal session out here. It's had a few of them, then they just simply haven't mattered. There was one out here, Ken, on January 13th as well. That high is 32.83, so you're trading above that. So it's those are candlesticks, Ken, that are supposed to matter. And when they don't matter, that's a beautiful thing. That tells you that there is strong momentum inside of the equity. Is your question, where's it going to go to?
Well, yeah, I like I say, I've held it for quite a while. It's almost at its highs. It does pay a pretty good dividend.
Yes.
I think I'll just hold on to it for a while, but I'll just...
Yeah, I mean, you're in at a nice price, obviously. If you're in at the 15s and, you've already gotten 100% and you've taken some profits off of the table, You'd have to see something really bearish inside of this equity in order to really take that trade off of the table out here.
Yeah.
Very super strong momentum behind this move out here, and it would seem that this does want to make a run for its highs because it is inside that swing point from June of 2007, which is the low. Go ahead.
It just made its high here not too long ago, a couple weeks ago.
Yeah. Actually, it's not inside the actual swing point. Let me restate that. June 22nd, 2007 is the swing point that it's headed to. So the low is 34.25. Obviously, you'd love to see it get inside that swing point, volume or not. You'd like to see it get inside there with volume. But if it can close inside 34.25, then the $38, hey, it's a Basel round number high out there. Probably that becomes its target out there. But it looks pretty good to me.
Look good. If you got time, take a look at NAT.
NAT?
Yeah, it's a shipper.
Yep, I can do Nordic American Tankers out here. All right, so tell me what you're doing with Nordic American Tankers.
Well, I bought it at $8.67, and I've held it for probably, 6 months or so.
Yeah. Looks pretty. Let's go take a look at the. Let me put up the momentum system up here. Give me a second here to find one of the charts out here. Should be right here. NAT. So I want to just take a look at it. Now, the shippers, I've been following the shippers as well. Boy, this is at a nice, strong momentum move out here. This is the daily chart that we're looking at. Let me put the weekly chart on the system out here. So you're in at a nice price. The shippers were forming some pretty nice lows out here, even on the weekly chart. This thing is up above some nice support levels. It's trading into a swing point, little evening star. So it's got a little bit of a reversal formation, resistance area that it's going to need to get above, and that is the trading session from the week. It looks like in the week of March 13th, 2013, the high of which is $12 out there. So let's go take a look and see what this is doing from a volume standpoint as it approaches that area here. So on the daily chart, that's the trading session of March 26th. $12 is the number, 1.2 million shares, and you're coming into it with, you're coming into it nicely. 4 or 5 million shares. Even today, you've got 1 million shares as it comes into that area. So that looks that's pretty healthy when you come into a swing point with some volume. So that looks pretty darn good out there as well. What's your target? Do you have a target set on this? What do you use for your?
No, I don't really have a target on that one. I just watch it closely and.
Yeah, what you'd like to see it do is get above these. This thing is broken. It looks like it's even broken its trend line. It's done a little bit of everything. No, it has not broken the trend line. Let me back this up just a bit. Maybe that's where it starts to run into some resistance out here. Maybe more so the channel line, but it looks good so far. The next area here for this to motor on through, Ken, is probably about the 1470, 1604 level, and that's on NAT, Nordic American Tankers. So nice trades out there.
Okay, well, if it got above 1250, I think I'd take a really close look at it. But that 1417 looks good. Thank you so much.
The next reversal signal, and you're coming into with volume, is the week of March 29th out here, and that high is $12 even, Steven. So it's at $11.75 right now. If it gets over that, no reason for it to not run up to the next level.
Thank you so much.
Hey, you bet. Thanks so much for calling. A nice trading out there. That is Ken in Iowa. Let's go to Suzanne in Canada. Suzanne, thanks for calling. Thanks for holding. How are you today?
Very good, thank you. I love listening to your show.
I love that you love listening. I'm sorry?
I admire your intelligence and your motivational abilities. You are fantastic.
Well, thank you very much. That check is in the mail. Postage.
I have a question. NUGT, I got stopped out at 28, and I haven't been able to get in. It kind of keeps running up. Where would you get in?
I'll tell you what, Suzanne, if you hold on through the break here, we'll come back. We'll take a look at Nugget Right now, trading at $37.04. We'll be right back, folks.
Thanks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow's off 50 points right now. S&P is up 2. Composite is up 13. And we're going back to Suzanne in Canada. So, Suzanne, you were inside the NUGT trade and you were stopped out. Were you stopped out for a profit?
28. No, break even, kind of.
Break even. Okay.
28, and I never got in. I was thinking it should make a little retracement, but it keeps going up. I follow GDX, underlying index.
Absolutely.
So whichever one you want to analyze.
No problem. So here, if you're watching this on Tiger TV, let me show you something that's interesting because
I'd like to watch you on TV, Tiger TV. So is it okay if I hang up and you go ahead and...
Go right ahead. Yeah, absolutely. Suzanne, thanks so much for calling and listening. We appreciate it.
It's a pleasure to listen to you, and thank you very much.
My pleasure.
Now.
My pleasure. Okay. All right, so we're going to pull this apart here in the next 3 minutes for Suzanne. We're taking a look at the NUGT. Now, the NUGT, the Nugget, that's the 300% ETF for the GDX, as Suzanne mentioned. I've got a red line going across my screen here. That red line happens to be the gold contract out here. And what you'll see is you'll see a correlating price movement between the price of gold and the equities. I mean, it mirrors it so well out here. Now, don't be paying attention to the distance of travel, just simply direction. And one of the things that I want to point out to you is that inside of the Nugget, gold has been moving back today, and the Nugget has been moving higher. That tells you just, Irene, that tells you just how strong the Nugget is. Now, if you mentioned the GDX, and if we take a look at the GDX, I'm going to put something up on the screen here for you. If you're watching this on Tiger TV, these are all except for about 5 holdings. I need to adjust the screen, but these are all the holdings within inside the GDX on a weekly, daily, and 120-minute time frame. And this is utilizing the Rhodes Momentum Indicator system here that helps you to identify the trend. This shows that on the weekly, daily, and 120-minute chart for every stock inside the GDX, they are all in bullish mode, folks. This is the absolute strongest sector with inside of the markets right now. Every single stock on a weekly, on a daily, on a 120-minute chart is in strong bullish mode. So what you're going to have to do here, Irene, you're going to have to I'm not sorry, Suzanne. What you're going to have to do, Suzanne, I think you're just going to have to plug your nose and dive in and take a trade and use a wide enough stop out there. And that stop, here's how you place the trade. Go ahead and take 1% of your working capital, figure out what the average true range is, multiply that times 1.618 to figure out what your stop size should be out there, and take that 1% figure. If it's on $10,000, that would be $100. Take $100, divide it by your stop, and that's how many shares you should buy out here. This is the place to be. There's no question about it. As we speak here right now, it has got the strongest bullish momentum. Now let's go to Irene in San Diego. Let's see if we can get to Irene. She wanted to take a look at IMUC. Good morning, Irene. How are you?
Good morning. I'm fine. How are you?
Excellent. Tell me what you're doing, and I'll see if I can do this in about 30 seconds.
Okay. I bought it at 06. And
okay.
I don't know. I'm just riding it up, and I guess I wanted to know when you think it'll stop.
Yeah, so, your danger inside this is that big, huge downdraft out here with 21 million shares on December 12th. And the question's going to be, at that stage, are those, and you've also got, you got this November 25th high where you've got 9.6 million shares, and you got this high volume high out here on November 26th. The question's going to be, for folks that were in at that 350 to 250 range, are they going to, at some point in time, start to take their money back? But just keep your stop in place. But this looks pretty good here so far. But at some point in time, you're going to run into a supply line out here. You're inside that gap, and I don't know where that's going to be.
Okay.
Alrighty?
Thank you.
You bet. Hey, folks, stay tuned. Basil Chapman is up next. Thanks so much for being here on Terrific Tuesday. Have a safe day. I look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.